inflation has been crazy since then. The cost of everything has gone up significantly, and that's about 200,000 homes statewide have more than $500,000 in appreciation. Hey, there's a ton of tax benefits from owning a home, but one of the biggest ones is one that isn't talked about a lot. So I'm going to give you all of the details about it, and if you stay to the end, I'll tell you exactly how it's affecting the market right now, because when the government sets tax policy, a lot of times it drives the public's behavior, and this is one factor in the real estate market that is definitely driving behavior today that really isn't talked about that much. So let's get right into it. So what the law is called is the Federal Capital Gains Exclusion on a primary residence, and it's Internal Revenue Code 121. And this is a way that homeowners can keep, if they're an individual, $250,000, and if they're married filing jointly, $500,000 of tax-free gain on the value of their property. And so it's a humongous tax savings and a huge incentive to home ownership, because really, how else can you save that much money from just kind of sitting around and owning an asset? So let's get into some of the details here. So first thing is a disclaimer. This is purely for educational purposes. I am not a tax professional. Please consult with your CPA or tax professional before you make any financial decisions around this. This is a broad overview. Everybody's personal tax and financial situation is different, so please consult with a professional before you make any decisions. And so generally, how does this work, right? Pretty simple. You can, if you live in your home up to 2 years and you've owned it for more than 2 years, you can get $250,000 exempted from the gain in equity of that property if you're a single filer, or $500,000 if you're married and you file jointly. This is one of the most valuable benefits of home ownership, and this is where it comes from. So in 1997, the federal government passed the Taxpayer Relief Act, and it did exactly what I just said, right? There's a 5-year look back before the sale. If you've owned the property for more than 2 years and you've lived in it for more than 2 years, it does not need to be consecutive, but you need to, out of the last 5 years, have lived in the property 2 years, and then you qualify for this exemption. If you're looking to relocate here on the Big Island, I want to share with you a resource that we put together. Over 80 agents from my team, expert agents here on the Big Island, put together a relocation guide that will help you evaluate all of the important factors that you want to take into account before you move here to the Big Island. School districts, healthcare, employment, all of the things that you got to think about, we put into one home buyer's guide that will help you figure out what is best when you start this relocation process here to the Big Island. So if you want this guide, just click on the link below, fill out the form. We will send you the guide for free. And if you want to take the next steps and have a conversation with us, we'd be happy to help. And so this is some kind of the core eligibility, right? The things that are required for you to qualify. Like I said, you have to live in the home for 2 of the last 5 years. And then you can only use this once every 2 years. So if for whatever reason, based on ownership of 2 different homes, and over that 5-year period, you can claim that you've lived in both of them for 2 years, you can only use this exemption once every 2 years. So that's very important. And then again, if you are married filing jointly, the exemption doubles to $500,000. And then there are some ways that you can continue to qualify if you're a surviving spouse for the $500,000. And again, consult with a tax professional there. But if a spouse passes away, you can still qualify for the $500,000 if you meet certain requirements. And so some limitations on this, right? Very, very important to be aware of is that there is some depreciation recapture requirements here. So if you use the house and you write off depreciation for a home office or use it as a rental, a non-qualified use, it can create some limitations to the exemption. And then again, if you have any reporting of a 1099-S or you have some type of taxable gain, you need to file this form 8949 and a Schedule D. But the recapture is taxed at 25%. So again, this is all something that a CPA should look at and calculate and figure out how it applies to your personal situation. But very, very important, there are some limitations to this and you want to be aware of them. And then of course, documentation is the best thing you could possibly do, right? Is make sure that you are documenting everything from the money you spend on the property to any additional income. You want to keep things like utility bills, and so people can see that you definitely live there, and you can prove to the IRS that you live there, or voter registration records, things like that. So make sure you just keep good records. At the end of the day, paperwork wins audits, and that's something that you always want to keep in mind when you're dealing with the IRS, is have a good paper trail of everything that you're doing with that property. And then finally, like I said at the beginning, this definitely affects the market, right? And what's interesting about this is a great benefit to being a homeowner. But if you think about 1997 is when it passed, and it hasn't changed since then. And of course, inflation has been crazy since then. The cost of everything has gone up significantly. And so if you do the basic consumer price index math, right, $250,000 in 1997 is worth $503,000 today. And in 2020, and 500,000 in 1997 is worth over $1 million today in 2025. And so really this exemption has lost 50% of its value. And you think about back in 1997, it was very difficult it would take a very long time before you accumulated $500,000 in equity in your home. In today's world, if you bought a house in 2018, 2019, 2020, by today, 5 years later, many homes, depending on the price point, have accumulated $500,000+ in equity. And so this benefit isn't as big as it used to be in relation to inflation and what the cost of everything is today. And what this is doing is it's keeping inventory constrained, because this is a direct disincentive to a homeowner selling their property. If they've been in the home for 10 or 15 years and they have $1 million worth of equity, they potentially have a big tax liability if they sell their house. And so this coupled with other things like interest rates are keeping people in their homes. And it's something that really, nationally, Congress needs to look at adjusting, because it would then fit the times today and what the cost of just everything in the world is. And so if you look at this nationwide, there's roughly 7 million homeowners in the country that are sitting on more than $500,000 in equity in their home. And if you look at this just locally in Hawaii, about 1 in every 3 homes has, and that's about 200,000 homes statewide, have more than $500,000 in appreciation. And so we are actually number 1 in the entire country here in Hawaii for potential exposure to a tax liability because of the $500,000 cap on this exemption. So it's something definitely that is affecting the market. A lot of times people aren't aware of it. It's not something that's talked about in the news a lot. But if you look at the financial incentive structure of everything that we do in the world, it affects how consumers behave and how people behave. And this is definitely one that incentivizes people to stay in their homes. So I hope this is helpful. You can kind of understand the big picture here. And again, if you were somebody that was a first-time homeowner or home buyer back in 2019, and today you have $500,000 in equity, you can cash that equity out absolutely tax-free. It is a humongous benefit of home ownership. How else could you have accumulated that much wealth over the last few years? So again, in addition to all of the other mortgage write-offs and things like that, this is probably the biggest benefit that you have for being a homeowner from a tax structure standpoint. And so if you have any questions, again, happy to answer your real estate questions. If you have any questions about your tax situation, ask your CPA or a tax professional. You can always reach out. There is a link in the description below to my calendar. You can email me at Dylan@BuyBigIsland. But again, always thank you guys for watching and listening, and I'll see you guys next week. Aloha.